So in this chapter, chapter 6, we're going to be talking about nonprofit accountability and performance. These are essential qualities and characteristics of effective nonprofit organizations, or the ability to be accountable and to have effective performance. So what does it mean to be accountable? Accountability is taking responsibility for an individual or organization's actions. Accountability also includes not doing things that are wrong. You would be following the law if you did something that's right, but if you broke the law, you would be doing something wrong, so that wouldn't be accountable. So doing the right things would be following best practices. Demonstrating effectiveness, which would be measuring impact on the organization's mission. So accountability includes not doing things that are wrong, doing things that are right, and demonstrating your effectiveness. There's a good student metaphor, which means following the rules and meeting the basic requirements, engaging in exemplary student behavior, and demonstrating understanding of course material. So if you looked at a nonprofit organization as a good student, the good student would be following the rules, meeting your basic requirements, just like you, engaged in exemplary behavior, demonstrating and understanding the course material. So look at it that way. So what are the mechanisms for accountability? The first are legal requirements. So nonprofit organizations must be accountable to the state and federal laws as well as the IRS regulations. There are self-regulation methods. There's a nonprofit sector panel. There's a study in 2005. So there's a panel that created self-regulation standards. And these standards of best practices include accreditation and certification. And there's a long history in educational and healthcare institutions of the standards of best practices. And it's a relatively recent concept in the broader nonprofit sector. So based on the history of educational and healthcare institutions' best practices, there will continue to be more emphasis on best practices for nonprofit organizations in general. Another mechanism for accountability are charity watchdogs. You may have heard of some of these. They proactively examine nonprofit organizations and apply their own standards. They're watching out to see what's going on and making sure that they're monitoring and overseeing nonprofit organizations. They complete their evaluations with or without the cooperation of the nonprofit organizations. So the watchdogs are out there trying to make sure that there are no concerns with how the nonprofit organizations are run, and not too much of the money is going into someone's pocket as opposed to the mission itself. So you've heard about charity watchdogs and what they do and what their role is. So that's a mechanism for accountability. And then the transparency of the availability of the IRS Form 990 that you've learned about, that must be filed by the nonprofit organizations that have revenue of over $25,000. They must file that form, and that also provides another mechanism for accountability. Now this slide and the next several include the principles for good governance and ethical practices. I am not going to read through all of this for you on the PowerPoint presentation, but I must stress how important these slides are. So be sure to read through the legal compliance and public disclosure. There's 7 items there, and move on into the effective governance, strong financial oversight, and responsible fundraising, because these are all principles for good governance and ethical practices, and the foundation for good governance and ethical practices in nonprofit organizations. So that's really key, to be sure that you have read and understood those 3 pages on between 137 and 139. Again, it's legal compliance and public disclosure, effective governance, strong financial oversight, and responsible fundraising. This is the same table, just a continuation of it, of the principles for good governance and ethical practices. The third and final slide, which discusses the principles for good governance and ethical practices, and this is the portion on responsible fundraising. So be sure that you read over and understand the responsible fundraising. So now we're going to discuss measuring performance. This is an introduction to how to measure performance of a nonprofit organization. And so first we're going to talk about what effectiveness is as it relates to achieving the mission. How effective is the organization in achieving the mission? And performance is a broader concept that includes the financial results and other variables related to the overall organization in addition to effectiveness. Performance is a broader concept. It includes financial results and other variables. So key questions. How do we ensure that an organization is effective in achieving its mission? And how do we define and measure an organization's impact? So key terms and distinctions are organizational performance, effectiveness versus efficiency, and organizational versus program effectiveness. So those are all questions that we will be responding to in the balance of talking about measuring performance. So this is where we talk about measuring performance and what are the strategies and how do you go about measuring performance. Well, one way is to calculate financial ratios. So if you had an accounting class, you'll know what financial ratios are and how those are calculated. If you haven't, be sure to study the section on page 142 in your textbooks, which talks about various financial ratios and the common ones being applied to nonprofit organizations. What are the costs of fundraising? What is the percentage of costs associated with raising the funds? And what is the percentage of the overhead expenditures? How much does it cost to administer the nonprofit organization? What is the administrative expense? And then there's also a section on page 143 on the Charity Navigator, and this is a table which outlines the organizational efficiency and how they use 4 key indicators to determine how efficient and responsible a nonprofit could be on a day-to-day basis, where there's a discussion of program expenses, administrative expenses, fundraising expenses, the fundraising efficiency, and then the score of that. And so they talk about the primary revenue growth and program expenses and the working capital ratio. So this is another way in which efficiencies can be determined by using financial calculations. How well is the organization being run? How efficient are they with the dollars? How much of the money is going toward the actual mission? How much goes toward administration? So this is really important. And then also measuring against the peers. And benchmarking means comparing one organization to another. So comparing one nonprofit organization to another organization, how well are they performing? And this can be done by statistical benchmarking as well as corporate benchmarking. So be sure that you're familiar with those terms by reviewing that discussion in the text. Another way of looking at the efficiency is through the logic model, which you should be familiar with because I included a logic model in the beginning of the course. There was a PDF that you could print out that showed how the logic of the course was organized. And this is also a way to look at nonprofit organizations in terms of inputs, activities, outputs, and outcomes. And so this kind of graphic depiction is another way to measure how efficient a nonprofit organization is. And that is also included so that you can take a look at another option in a way of determining the effectiveness of a nonprofit organization. If you input certain items and have certain activities, the outputs and the outcomes should be determined. So you should be able to measure and determine those. So this is measuring performance strategies continued, and this is for the discussion of the logic model where you can measure against the mission and determine what the outcomes are by taking the inputs, activities, and outputs and determining the outcomes. And then the logic model and the causal relationships, meaning what you input causes an outcome that you can measure. So this measures the immediate, intermediate, or long-term goals of the organization. So that's one way to look at measuring effectiveness. Another are the common indicators by identifying a common set of outcomes and indicators for all nonprofit organizations. So there may be common indicators that are available through agencies such as the Urban Institute and the Center for What Works, that you can take a nonprofit organization and measure your effectiveness against those outcomes and indicators that are standards. So here's another method or another strategy to determine nonprofit organizations, and that's what big part of what the textbook talks about and are these various methods. And one was developed by Kaplan and Norton in 1992, which is called a balance scorecard. You'll read about how it was originally developed for use in the for-profit sector, and it combines financial data with other considerations and takes a look at 4 perspectives: financial, customer or client, internal business, innovation, and learning. And then another called the Dashboard by Patton in 2003 showed the simple graphic portrayal of key variables used to monitor and communicate performance. This was developed as a balance scorecard specifically designed for nonprofits. So it's taking the Kaplan and Norton a step further and applying it specifically for nonprofits. There are 5 perspectives: current results, underlying performance, risks, assets, and capabilities, and change projects. So read about that and understand that this is specifically for nonprofit organizations and measuring performance. It's a strategy to measure performance and how well the nonprofit organization is functioning. Another strategy to measure performance of a nonprofit organization is what's called the SORI, or the social return on investment. This monetizes the social value created by nonprofits. It creates it in a monetary basis, the social value. This method is evolved from the cost-benefit analysis in accounting and for-profit businesses. So that's another way you'll want to read about a way to measure nonprofit organizations is through that social return on investment. The blended value builds on the concept of social return on investment and includes 3 measurements: the economic value, the social value, and the environmental value. And this is an attempt to define the common measures of performance for all organizations across all sectors. So it adds another element and adds another way to take a look at the effectiveness of the nonprofit organization by blending those concepts of social return on investment, economic value, social value, and environmental value. So again, it's another way to measure how well and how effective a nonprofit organization is. Well, like the other chapters, this one ends with a debate over performance measurement. There's a need for performance measurement, and management inherently involves the strategic allocation of resources to achieve the improvements and results. So you take what you've got as the management and allocate those resources to achieve and improve on the mission or the results. If you lack information about performance, it means that you cannot be certain that an organization is achieving its mission. So that's the need for performance measurement. The concerns about that is that there's a lack of universally acceptable standards and methods of measuring organizational performance. And that we illustrated through going through the various types and ways that the performance can be measured. The amount of time and effort that's devoted into measuring the effectiveness can take away from other activities in a nonprofit organization. So if there's a tremendous amount of time and effort being spent on whether you're effective or not, are you actually taking away from being effective? There's also a risk of developing disconnected managerialism, which Patton found in a study based in 2003. So read about all this in your textbook. Understand that there's more and more emphasis on measuring the performance of a nonprofit organization. There's certain methods and ways that have been gone about. There is a need, there's an agreement and a need for performance evaluation and measurement and concerns about how it's being done. So like many of the things we've talked about, there's on one hand this and then on the other hand that. So performance evaluation is important. It's becoming more and more important. There's a trend toward more emphasis on measuring performance in nonprofit organizations. So in summary, the behavior of the effective nonprofit CEO will be focusing on the mission, focusing on the board and external relationships, sharing the leadership with the board and empowering others, focusing on key roles and priorities, using a political frame, have the right person in the right place at the right time. And this is where you review again and the alignment model, the founder syndrome and life cycle theories, and the executive transitions and leading change. So this is going back to reviewing one more time the ensuring accountability and measuring performance all of these characteristics and behavior of the nonprofit CEO will end up with an organization, a nonprofit organization that is being operated effectively if the nonprofit CEO does these things.